Ladies and gentlemen, esteemed panelists and distinguished guests, welcome to our second of 4 debates on Kenya's Eurobond debt. We are weighing Kenya's financial future. On this debate, we discuss how Eurobonds contribute to economic growth, or do they pose a threat to the national sovereignty? With us are some panelists to help us delve into this matter. From the far right is Stella Swakei. She is a research analyst at Standard Investment Bank. With her is Patriciah, who is an experienced investments analyst at Saiton Investments. And joining us remotely is Dr. Harrison Mbori, who is a senior fellow with the African Sovereign Debt Justice Network. Karibuni sana, everyone. So, in this second session of our day, we try to delve more, having talked about what Eurobond is in the morning session, and delving more about our role as youth into it. So we'll try and talk about more or less understanding how these funds have been utilized, as well as assessing their contribution to the economic development. And furthermore, we'll try and talk about the obligations in terms of you and I, and more or less as a country, what are we supposed to do in terms of, do we have a noose around our necks around this? So to kick us off, just quickly, Stella, kindly tell us more about yourself and what you do on a day-to-day.
Hi everyone, I'm Stella Swakei, not Swakei. Yeah, it's a Maasai name. I know it's not relevant, but yeah. But I work with Standard Investment Bank. It's an investment bank, not a commercial bank. I hope you get the difference. So I sit in the research department where I analyze the fixed income market as well as the macroeconomic aspect of the economy. Yeah, on a day-to-day basis, I look at the current affairs, new things happening, things coming up. I cover GDP, inflation. I also cover debt, as is what we are discussing today, and any other thing that comes around that relates to the economy. That's me. And I tweet a lot. So if you need information on current affairs, on macroeconomic activities and news, you can follow me on Twitter at Stella Swakei.
All right, Harrison, tell us your day-to-day.
Thank you so much. My name is Harrison Mbori, as you've been told already. I'm a research fellow at the now African Sovereign Debt Justice Network. As part of this role, we mainly do work that is related towards researching on sovereign debt, especially justice issues that are related to sovereign debt, focusing especially on Africa. So I would say that my day-to-day related to this role involves, one, doing research on how sovereign debt serves or has not served or created injustice or justice within our spaces in Africa. Two, trying to find ways on how some of these problems can be resolved, especially because there are very many problems as it relates to sovereign debt in Africa. Three, then disseminating that research to the relevant, stakeholders, including what we're doing today. This is part of how we try to disseminate our research. And then four, just trying to engage on different forms and forums on ways on how some of these problems, especially as relates to sovereign debt, can be resolved for the benefit of the most vulnerable in our society: women, children, peasants, workers, and people who ordinarily wouldn't be able to have or amplify their voices in spaces where sovereign debt justice issues can be dealt with. That's what I do on a day-to-day basis related to this, but I do many more things in research. Thanks.
Thank you, Patricia. What is your day-to-day like?
Hey everyone. So I'm Patricia, of course. Patriciah Mutua, an investment analyst at Saiton. So as an investment analyst every day, we are dealing with fixed income we're dealing with equities. That is what I deal with. So I deal both, but majorly in fixed income, which entails, of course, what you're doing today, that is Eurobonds and public debt. So that is part of what I do every day, like tracking where the debt is currently. So most of the times you're working with numbers, not stories. So maybe you'll excuse us if we do too much numbers.
All right. With us are students from KCA and NIBS, as well as ZTech University, to join the conversation as well. So Harrison, let's start with you. Do Eurobonds contribute to economic growth, or do they pose threats to national sovereignty?
Yeah, the answer to that for Kenya is a no, based on the experience we've had so far. I mean, and I can give you many reasons based on what we have seen with how at least the 10-year Eurobond that was issued in 2014 that matured this year has been dealt with. One, we know that there are two different regimes that dealt with this question, and therefore there is a big political issue that underlies that. But this is a hard question to answer, mainly because there's limited transparency and accountability by our governments, especially in Africa. And Kenya is one of those governments that has not been fully transparent and accountable as is required under the Constitution. I ought to have mentioned that my background is law generally and international law specifically. So you'll hear a little bit of law in this discussion. So the Constitution of Kenya 2010 has many provisions that require, the government to be transparent, to be accountable to the people. There are many provisions, including in acts of parliament, that require public participation as relates to this matter. One, as most of you would already be aware, there's been very little public participation on questions of sovereign debt, including the Eurobond. So if you cannot find the information, it is very hard to then assess and know where this money has actually gone. In the past 10 years, many researchers have been trying to find out where exactly has this money been used in, and the government has been very stingy with information, especially as relates to sovereign debt. So what we have gathered generally is that one of the places where these monies are going, this debt, is to feed into our budget deficits. Now, while there's information that a large chunk of this money went to feed in the budget deficits, you know that proving that also has been a little bit difficult because of the way in which the Ministry of Finance actually consolidates the funds. Two, and which I think is very worrying about our Eurobond, and just this past few weeks, we have been taking other Eurobonds to repay the current Eurobond. So you can think about it, if you have to borrow more in order to be able to pay your debt, you're really in trouble. I mean, if this was our own individual families, and there are people here who are better financial experts, any financial expert might tell you it doesn't look good when you're doing this kind of engagement. So our buyback was a buyback plus an issue of another Eurobond, and the proceeds that we got from this new Eurobond are the proceeds that then we have used to pay the previous Eurobond. For the youth of the country, therefore, means that the can is being kicked down the road. The responsibility for paying more debt is being pushed to the next generations, who then must ask this question that we've been asked: is this doing anything? And the last place, at least, which we have been told that the money has been used is to fund infrastructural projects. How much the money has gone into this is questionable. So the data that is out in public shows that the State Department for Infrastructure, the Ministry of Energy and Petroleum, and the Department of Education received large chunks of this Eurobond. All of us can then start asking questions like, perhaps, for example, in Nairobi, what's the biggest infrastructural development we have seen in the last 10 years? In my mind, maybe the expressway, maybe. I mean, there might be much more. But the expressway was not funded by the Eurobond. Interestingly, it is a PPP with monies coming, it's a private-public initiative with money coming mainly from the Chinese. So even the biggest infrastructural development that we have seen in the last 10 years, and yet we are being told that at least 64 billion Kenya shillings of this past Eurobond went into infrastructural development. You can give the government the benefit of doubt, which is hard to do, and say maybe there are many other infrastructural development that this money has gone to. But without clear, transparent, and accountable information, then this too is questionable. The Ministry of Energy and Petroleum has also said it has been doing rural electrification, including electrifying primary schools in rural areas. Again, information around this is scanty. And we know that our electricity utility in Kenya has been suffering in the past years. Now it is seriously laden with debt, which the government might need to deal with. And this debt, again, is related to PPPs, because we have huge debt, very big debt that has been generated, especially by independent power producers who are then selling electricity to Kenya Power at a very high rate, sometimes in USD, and that is affected by the forex exchange issue. We could talk about education and ask ourselves whether our educational system has improved. If anything, our education system has not improved. Just this year, the Ministry of Education said that the capitation for high school students, which was at 22,000 Kenya shillings, has now been reduced to 17,000, meaning that parents have to pay more. One of the ways we are being told that they want to deal with this is, for example, to remove boarding schools, because a lot of money the government is paying to schools is going into boarding. But if you ask any parent who has taken a child to Form 1 this year how much money they need just to get a kid into a national school, for example, you will see that there's a huge myth about free secondary education, for example. Our universities are worse. Most public universities are actually insolvent. And if you then think about this together, especially for the youth, you can see maybe the most important future for the youth is in education. And if these Eurobonds are not funding education, you start wondering whether they are actually serving the purpose that they're supposed to serve. And you can start to see why I'm making this important argument here, that the social value of the money we are borrowing is not at least being seen in the day-to-day lives of the most vulnerable of the youth, who are the main setting in this conversation. And then we have to start asking very tough questions within these sectors. I mean, if I went to the healthcare sector, right as we speak, one of the biggest reasons why doctors are on strike is because medical interns have not been absorbed. And again, this goes into how much money the government is putting for these important aspects. Yet we are borrowing quite a bit within these Eurobonds to try and solve some of these problems. Now, one inconsistency of claims, we have been told there have been a lot of inflation of how these monies have been used. It's not clear, which is tied to a question of corruption, for example, on how this infrastructural projects has been run. So there's a huge argument that there's been inflation of prices and costs, which is a corruption concern as it relates to Eurobond. When you put this together with the inconsistency and limited information that we have, then you can see why, instead of the Eurobond building, sovereign capacity and an ability for people to access public services, public goods, it is actually doing the opposite. So in the end, the very main aim for which we borrow for, we end up getting into serious trouble as a nation. And of course, these are some of the issues that we are saying are questions of injustice about how public funds are used. And again, this relates to how the Eurobond is structured. I think you've already heard about how it is structured and how it's a very attractive tool for the government. Now, we haven't defaulted. This year, there was questions whether we would actually default. And that's why people were holding dollars in the drawers, hoping that the government would have issued a domestic bond. So we haven't, but Ethiopia has defaulted. Zambia did default. Ghana has defaulted. So, default is not very far. In fact, people thought that we were going to default. So those are some of the points that I myself see on this question, and we must interrogate and we must ask ourselves, how can some of these problems be resolved in a way that will make this Eurobond, if it must be issued, or if we must get this kind of debt, used for the benefit of the most vulnerable and the people whom it is supposed to serve, which are Kenyans, because that's why we issue this debt. Otherwise, the people, we will be paying what is normally called in international financial circles odious debt. You don't know where the money went, but because you borrowed it, you have to pay it back. And there's no law, there's no international law on odious debt, number one. Number two, there is no law, at least international law, on how to resolve the question of insolvent nations, not leave out companies, nations. The law on how to deal with the default and insolvency of nations, which cannot then
Harrison,
be
if you can hear me.
wound up. Okay.
So we'll come back to the matter of law in just a moment. But first, Stella, on the same question, do Eurobonds contribute to economic growth or pose threats to the national sovereignty? What are your thoughts?
A direct answer would be yes and no, but I will explain.
Okay.
So on one end, Eurobonds are part of the alternative borrowing alternatives that a country has. So you put yourself out there and say, we need financing for our budget deficits or even for our infrastructural projects. So it's one of the alternative ways, and we keep talking about diversity, and diversifying is a good thing. Number two, Eurobonds help a country to assess their ability or their openness to access the global market. So because, as someone explained here, Eurobonds are issued to international markets, and they are issued in a currency other than the currency of the issuing country. So it helps a country to assess its accessibility of the international market and how the international market embraces such a country. So this is with regards to how the foreign investors or the foreigners are seeing this country. Is it a country that is about to grow? Is it a country that has a positive outlook in terms of its growth prospects? Is it a country that we can rely on in terms of them giving us this investment and being able to meet its obligation in the future? Number three, Eurobonds help alleviate pressure on domestic interest rates. So Eurobonds are a form of external borrowing, and we also have domestic borrowing in terms of bonds and treasury bills and even CBK overdrafts. So when a country has or a government has an alternative to borrow from, the domestic investors don't have too much of a leverage, if I would call it that way, such that the government is able to control the interest rates that it gives to the investors. Right now, the interest rates in the domestic market are very high, and we have seen the government being, if I would call it that, desperate to have more money. So to answer my no side, Eurobonds would pose a sovereignty risk if such debt levels are considered unsustainable. So we have had IMF and even World Bank positioning and setting Kenya aside and saying that this country is at high risk of debt unsustainability. So when you have or when you accumulate high levels of debt, your debt might become unsustainable and it would pose sovereign risk. So sovereign risk is the issue of you as a country not being able to determine or to put forward your terms and conditions. You're being, say, I'm explaining it in the simplest way, being, if I could put it in quotes, controlled by other people. And in this case, other countries or the external investors or the foreign investors. So on my yes side, Eurobonds could pose sovereignty risk if at all this debt becomes unsustainable. But again, Eurobonds cannot be unsustainable alone because we have many other debts from external financiers. Someone mentioned IMF. we have World Bank, and those ones are a bit better loans because they are concessional loans. They are given at favorable rates and a good period for the country or for whoever is borrowing to pay back. Then we have commercial loans, whereby a country borrows from commercial banks of other countries. For example, Export-Import Bank of China, or any other a commercial bank in another country, and mostly Kenya borrows from China. Then we have syndicated loans, whereby different players come in, different lenders come in, join hands, and they say, this amount that is being borrowed by this particular country is a huge amount. Let's come together, join hands, and lend them this money. So we have different loans that when we bring them together, you might find yourself as a country being termed as a country that is at a high risk of debt and sustainability. So we were termed that way by IMF, and we have been that way for a long period of time. And as Harrison has pointed out, there was too much of jitters in terms of whether Kenya will default or not. But we thank God, the country did not default. So many asked, what is the problem of defaulting? Because several economists and analysts pointed out that the Kenya Kwanza regime is so much into preventing the country from defaulting and forgetting other things in terms of developing the country and maybe rescuing or allowing the economy to recover. So there are downsides to defaulting, which include too much of investors not taking their money out of a country, which we call investor flight. Because who in their right senses would put their money in a country that is not being able to meet its obligations in terms of repaying back that debt? No one. So in terms of that particular aspect, there were so many jitters, and yeah, we did not default as a country. He has also mentioned the bit on a country borrowing to repay back the other loans. So just to use a bit of numbers, as of February, the Treasury usually publishes the actual budget receipts and the expenditure. So looking at the numbers, 42% of Kenya's expenditure was financed through borrowing. So when you look at that and you look at the revenue figures, you look at the projections, and you look at how the numbers are doing, you get to see why the government chose this alternative of borrowing to repay. It's like me borrowing Patricia to repay Harrison. So it becomes a cycle of debt whereby we have so much debt here. They are coming knocking and saying, look here, we need our money back. And this country here has no other monies or has no enough resources in terms of funds to repay them back. So they are forced to go back into the market to borrow so that they pay the people that they owe money. Yeah, so you look at it in that manner and you get to see where the government is coming from. Yeah, so yes, that will be my answer.
So yours is, yes, they do pose a threat, and no, they do actually help in terms of ensuring that the government actually stays afloat. Yeah. Patricia, what are your thoughts on the same? Eurobonds, do they contribute to economic growth, or do they pose a threat to the national sovereignty?
For me, Stella, I know for sure there's a yes and there's a no. So there's a positive of it and there's a negative of it when you look at Eurobonds. I don't know if my mic is okay.
Yeah, it is. We can hear you. Okay. We can hear you clearly.
Okay. So the first thing about Eurobonds, they will give you capital as a country. And when you get the capital, now you're in a position to fund your projects. And in this particular case, we are talking about big projects that maybe you'll not be in a position to borrow in the domestic market to be able to put them through, like the infrastructure, then there's health. Those are projects that the government will need specific money for those projects. That's why we see the government issuing sometimes the infrastructure bond, which is specifically meant for that purpose because they are big projects for the government. So the Eurobond will give the government capital to put into those kind of projects. So if the government is true, I don't know how Kenyan government is true, the Eurobond issue is supposed to make the economy better. It's supposed to increase the productivity of the economy, because when you put your money in, say, like infrastructure or in health, that in a way, as much as maybe you're not going to get the cash, the real money from it, it's not like a shop you're going to buy something from it, but it increases the GDP productivity in our country. So in the long term, or in the medium term to the long term, you're supposed to get the fruits from the Eurobond. There's a study that I was reading about, and it was saying the return from a Eurobond is the highest between the first 3 years. After the 3 years, the returns from the Eurobond, it's hard to pinpoint them, because I think the money gets lost in the economy, especially where there's no clean transparency of what the money is doing. So in the first 3 years, if you cannot pinpoint the effect of the Eurobond issue in the economy, especially the Eurobonds that are termed as budget support Eurobonds. You know, we had the previous one, which was a buyback. It was financing a buyback. So maybe we are not going to see any economic productivity from it, but we have the Eurobonds that, like the one which is maturing in June, the one that we were buying back, it was for productivity, economic productivity reasons. So if we didn't see any productivity in the 3 years, I think we just forget about it. And as he mentioned, we didn't see so much of infrastructure or so much of health things going on, maybe hospitals or schools or anything of that in the economy. So it's very hard for us to pinpoint and say it did work in Kenya, but in a very functional economy, Eurobonds are supposed to have that substantial effect in the economy in terms of GDP growth. Then on the other thing is about the debt sustainability in the country. On this, we can look at the effect of the debt of the Eurobond in terms of the debt of the country. In the same study, it said that the GDP, or the debt to GDP ratio, that is the amount of debt in a country, to the GDP, that is the gross productivity in the economy, increases by at least 10 points in the long term after an issue of a Eurobond. So that means if, for example, I issue a Eurobond today compared to maybe, say, for example, Rwanda didn't issue a Eurobond and I did issue one, my debt to GDP ratio, it's bound to increase by at least 10 points compared to the country that didn't issue any Eurobond. So what does this mean? That means my debt sustainability is compromised when I issue a Eurobond. And this, of course, it's a negative thing because it will affect maybe your credit rating. So we have the credit ratings that are given by the what are they called? The credit rating agencies. Yeah, so we have like Fitch and we have the S&P, we have Moody's. So those credit ratings, like when an investor wants to invest in your country, maybe the investor is outside there, maybe they don't even know much about Kenya, and they go see your rating is, for example, currently for Kenya is B with a negative outlook, and for another country maybe is much better than that. So the investor will want to invest in the other country compared to you. So that is what the credit rating talks about your country. So when your debt sustainability is not as good, your credit rating is low as a country. So that makes you unfavorable, or maybe you can say unfavorable to investors. Not many investors will want to invest in a country that is rated lowly. For example, in the case of Ghana, in the case of Ethiopia, in the case of Zambia, who have defaulted in their loans, their credit rating is default. So it's almost impossible. We can say that for a normal investor who is counting on their returns to want to invest in such countries when we have other countries that have better credit ratings. So that will affect debt sustainability, and mostly in the sub-Saharan region, that is the sub-Saharan Africa region where Kenya is part of. It's a major issue because we don't have the good transparency and good records of what you're doing with the money after you get it. So what does that mean? That means when the government will get the money, they'll want even to do things that were not even stated in what they'll do. So they'll maybe spend the money in recurrent budgets, or probably use the money in things that will not give it back. So the government will find itself in a position where it's unable to raise the money, and yet it's got the money to increase productivity. But in this case, the debt is maturing, but the government is unable to raise the money. So in such a case, the government might get into a debt distress, and that's where Kenya was headed, or where everyone thought Kenya was headed. So we got the government went the route of a buyback. So if, for example, the country didn't manage to issue the Eurobond successfully, maybe we would be in a position where I don't want to say we would have defaulted. Maybe the government would have gone to the multilateral loans, or probably use the foreign reserves that we have, which in my thinking, it would not be the best option, because in that case, there's so much economics around it. If you're going to use the reserves that you have to pay a loan, you're exposing your currency to more depreciation, in short, just to put it in a simple way. If you're exploiting your reserves to pay debt, you're putting your currency in a position where it becomes less favorable to the foreign currencies. In this case, probably the US dollar, since the Eurobond was in the dollar. So on the positives, I can go to the positives just first. I think a Eurobond will support our domestic currency in terms of, if we get a Eurobond, of our reserves for example, if we get a dollar Eurobond, our reserves in dollars increases. In such a case, our shilling is under less pressure because we have more supply of the dollar in the market. So in that case, it can support the value of the domestic currency. And another thing is about the domestic rates, as Stella said. The rates in the domestic market are supported, because if the government doesn't have much of an option, like we've seen in the last Eurobond was, the government tried to issue a Eurobond in 2021. It wasn't successful, or rather it was planning to issue one in 2022. It wasn't successful. So the government has been so under pressure to borrow in the domestic market. So that way, the rates have been going high. Why? Because the government, when the rates are, the government can borrow at 17% where we are right now. But how many Kenyans can borrow loans at that rate? Currently, the rates are around, even for banks, they're above 20% for normal borrowers. The rates can go even up to 22%. So in that case, the government is borrowing the money from banks, because banks are the main borrowers for the government. So there's like a competition for the funds in the market between normal borrowers and the government. So the banks will want to lend to the government. That means that the private sector doesn't have enough money. So that makes the rates continue going high as the private sector is subdued. But
thank you, Patricia. Your time is really out. Okay. So we're quickly going to take some questions from the audience. Ephantus Moremi from KCA, and Gethenji from KCA, get ready as well. Ephantus, where are you, Ephantus? Let's get him a mic. Harrison, as he's asking his question, kindly prepare yourself. When we talk about the threats to national sovereignty, most people think about could we have KPA auctioned? Would we have to lose JKIA? Prepare to respond to that as well in terms of the terms and conditions typically attached to Eurobond insurance in Kenya. All right?
The question is borrowing to expenditure the best thing that the government can do? And if not, then why is the government doing it? Because right now, according to the data, the biggest expenditure that the government has to incur right now is going on interest rates. We are paying around 750 B right now on interest accrued, and next year we are going to pay about 850 B. So is borrowing to finance recurrent expenditure the best thing as of how we can use the Eurobond?
Stella, do you want to take that?
Yeah, sure.
My name is Binji Kagunda. So my question is, what is your take on public-private projects, and is it a great way to alleviate debt on the government?
Stella.
Expenditure and revenue guidelines are also in the Constitution, and I don't think I would like to say this on record, but the government does not always do what is best for the citizens, and it does not always do what they do not like optimize the best options that they have. So under the Constitution, for example, debt servicing or debt repayment is charged as a first charge. So by first charge, it means that it's the first priority for any cash flow that a country has, whether it's from debt or from revenues. They first have to pay debt. So for instance, for the first 8 months of the current fiscal year, that is fiscal year 2023-2024, 80% of the revenues has been used to pay debt back. So we remain with only 40%. So this means that for every 100 shillings that KRA collects as revenues, 80% or 80 shillings goes to debt repayment. So you remain with 20 shillings, not 40, sorry, 20 shillings to spend on development and also to spend on recurrent. Recurrent expenditure is salaries, electricity bills for all those ministries and the things that recur in a ministry or in the ministry. So it comes second after debt servicing. So 80% has been used for debt servicing, and we remain with 20%. 20% is not enough. Definitely, it can't be enough for the government to do the developments that they want, and also to pay salaries for the many people or the many civil servants that are in the country or have been employed by the government. The option that you would go for as a government is to clean out the ministries, to reduce the number of civil servants in a country, which we call fiscal consolidation or austerity measures. So fiscal consolidation is cutting expenditure and ramping up revenues or boosting revenues. So the government here is constantly or consistently employing measures to ramp up revenues, to grow revenues. You've heard of taxes being increased, the highly contented VAT on fuel in the last financial, finance bill. So most of the effort is being done or is being put on increasing revenues as opposed to cutting expenditure. Then out of nowhere, you hear the controller of budget saying, oh, we've seen the government is inflating salaries of top managerial levels by 3 times or things like that. This money is not being found. This money went here, this money went there. So, and then we find ourselves as Kenyans with the problems of, yes, we have transparency, but there's no accountability. So it becomes a cycle of things. We have the money, most of it goes to debt servicing. Then we have this other small money that we are supposed to distribute between development, between recurrent and any other thing that comes about for the government. And the government has no other way. So they go back to borrowing. That is the first option that they turn to. And
Stella, kindly, you
I
come
wind
back
up?
to it. Just keep it
Okay.
short. Just
It's
keep it short.
okay.
Patricia, can you respond to your question?
So the question was whether public-private partnerships
Can be
help in
used to alleviate some of the debt that we have at the
debt.
moment.
So my thinking and my view, I think it's a practical thing. I think we can say it's what happened with like the expressway. It's part of it because it's a private entity that is trying to do a project in the country. So that way, the government is not, we cannot say it's like spending the whole money. So in that way, it's going to preserve some of the revenues that were to be used in that project. However much the private company will still get money from the economy, but it will be gradual in it. So in my view, I think it's a practical thing that the government can employ. If we can get more projects like that, I know it's raised a lot of different opinions among the people, but I think it's a practical thing because it saves some of the revenues the governments could have used in that particular time to run that project.
All right, so Lang, as we are preparing the next set of questions, Harrison, quickly, in terms of exactly what we mean in terms of the threats that could happen in case Kenya defaults. Many think about the threats we have had in terms of getting KPA auctions, if KPA was what was listed on the loans. So what are the key terms typically attached to Eurobond insurance in Kenya, and how do they influence the country's ability to maintain the national sovereignty and economic autonomy?
Mr. Moderator, please just allow me to add my voice on this public-private partnership question before I answer your very good question. I agree with Patricia that this is a practical solution, but there is a big warning we have to put on public-private partnerships. In fact, in France, they have been called a debt time bomb. And it's because most of the debt is hidden. You know, you don't see it now because the government is not putting in the money, but there's a lot of hidden debt. You can think about the SGR and the expressway in terms of public-private partnerships as being suggested as a practical solution. So I agree with Patricia that they can be seen as a practical solution, but if you turn to the debt angle, especially the contingent liabilities, i.e. hidden debt that we're not seeing, they can become very dangerous for us as Kenyans. So let me just leave that there because I have used the expressway. It can get you to the airport very quickly. So sometimes we have to be careful with what we want and what we say. Now, threats to national sovereignty, which is the question you asked. For Eurobonds, normally the conditions are very limited. The government is normally to a large extent given freeway. And this then goes to my question, you know, what happens when you default? You know, I think Stella had sort of intimated about this and how bad and dangerous it can be. And she concentrated on the financial economic angle of it. The wider legal sovereign danger is that then there's a possibility of losing not ownership, let's be careful about this, but access and running of sovereign assets. Our assets as a state will always belong to the state. But you might find, and this happens more not in Eurobonds, but in bilateral lending, and the cautionary tale here is Sri Lanka, with their Chinese loans, that there are clauses in some of these contracts that give this, entities possibility to run our sovereign assets for a couple of years if we're not able to pay. So the danger, as I see it, is that we might lose the ability to, run KPA for 20 years. And you can imagine what that means. That's close to a generation, someone who's, imagine someone born now in 20 years. And so the sovereign assets will remain sovereign because of this idea of sovereign immunity. So that's important. But we also have to look at the debt composition question because the default for different debt has different consequences for purposes of sovereign immunity and sovereign implications. I thought Stella also tried to give us a very good view about how we should look at debt compositions. So that can help. Lastly, I think it's important to be concerned about how sovereign immunity is seen because the question of taking loans by the government is not considered an act, an imperial act, meaning it's not considered an act that the government cannot be held accountable for. It is actually considered to be a commercial act in international law, meaning the government can be sued for it, and then it has to pay, and that has an impact, a huge impact on our economy. That's number one. Governmental assets can then be used for purposes of repaying these loans. Additionally, there are two clubs that are known in international circles for dealing with some of these questions of debt restructuring. And I started saying that there is not a structured way in the international system on how to restructure debt. You can go to the Paris Club for bilateral loans. You can go to the London Club for commercial loans. But even among those two, there is not a very serious and good way of restructuring our debt. And now that we also have huge Chinese debt, China is not a member of the Paris Club, and the Paris Club has not alleviated most of our debt. So again, the dangers are there. Our national assets will always remain ours, even when we have been told there's been waivers of sovereign immunity in some of these clauses, which the government has refused to share. You remember when we were fighting with the government about showing us the loan of SGR, and we were promised it would be shown, and then we were not shown the whole contract. We were given parts and parcels of the contract that the government really wanted us to see. So up to date, guys, even though I think Stella mentioned this, there's a possibility of transparency. Who has seen the SGR loan contract in full? I haven't. So sometimes answering these questions are hard. Who has seen the expressway loan contracts, all the instruments in full? I haven't. Who have seen all the parties who have been involved in our buyback recently? Who are all the players, including foreign commercial banks that are involved? I haven't. So guys, there's no transparency. I really, if there is, it's very little. And then we get to accountability, which Stella has covered. Yeah. Let me stop there.
All right. So he has touched about the risks in terms of the debt in itself, and it seems as if you wanted to jump in. I would like you to jump in, but also highlight in terms of the effect. Is it really, do we have proper framework that kind of prevents us from going too wide in terms of these debts?
The only framework that I can think of is the debt to GDP ratio, the one that was contested in at Parliament, and our representatives agreed on a 55% ratio, plus or minus 5%. We are already way above that figure, and the Treasury came out and said that here we will go this journey for the next 3 years. So we will do the current financial, 3 years from 2024 to 2027. So that will be the only, because before it was a 10 trillion ceiling, and that we already surpassed. So the major framework or the borders, or say the ceiling that we are looking at, is the 55% GDP ratio. But which brings in the question of why have a target that you've already surpassed? Like, it brings in also the issue of accountability on these leaders that we have elected are not accountable enough to tell us that this is the debt we have, this is the ceiling that we've set, and this is what we are doing to achieve this. But they're telling us that, and every day we have new loans coming in. The loans might be justified, but the issue is that these loans are being financed by new borrowings because the money is not being put into viable projects. Because, for example, in the current atmosphere or environment, the money is being used to repay other loans. So it's a bit of complex interplay and an issue of accountability, doing viable projects, putting the money that we borrow into projects that bring productivity and add into the GDP of a country, and so on and so forth. So even, for example, the Eurobond that we bought back, and the little amount that remained that we are going to repay in June, what was it used for? I remember there was a scandal, if I remember well. Where was the money used for? What was the money used for? What can we show for it? And it's the largest amount of money that we have borrowed in terms of Eurobonds. We cannot pinpoint what it was used for. And that's why now we come to repay the money back, and we are having to borrow again to repay. So we will again pay the 1.5, and we don't see the use of the money, huge amounts of money that we don't see where the money is going. We don't see the productivity, and so on and so forth. That was the question, right?
Sure. Let's take another round of questions from the audience. In the meantime, Harrison, you talked about the implications of default, but they seem to have not been very clear. Prepare yourself to kind of more hammer the point, the nail very well. The next round is from Mark from NIBS, Ashley Nyawera as well. Mark, where are you? Mark? as well as Ashley. Ashley, where are you? Ashley? Prepare yourself. Hassan, also prepare yourself. Hassan from KCA, Wainaina from KCA as well. Prepare yourself. Ask your question kindly.
Ladies and gentlemen, I have got a question here. And my question is, how does the debt burden impact income distribution and poverty levels in Kenya? And what would be the possible remedies? That's my question. Thank you.
All right. Ashley? Patricia will take that. Ashley? I'll give you 3 minutes to respond to the question, to each question. Where is Ashley? She's not here. Hassan, if Hassan is here. Hassan.
We were recently told the whole issue with the currency exchange rates was improving because foreign investors were having more confidence in our economy since we acquired the Eurobond. Apart from, let's say, making sure that the funds are properly utilized to better the economy, are there any other strategies perhaps that can be used to make sure that the confidence does not falter?
Other strategies we can use to
yeah.
the investor confidence, right? Okay, Stella will take that. There was also one more. Wainaina, where are you? All right.
Yes, so my question would be, what is the perfect blend between domestic debt, public and foreign debt, considering that as a country, our domestic debt is even higher and more expensive compared to the foreign debt? And I would follow up that with another question, just briefly. Don't you think that our government is hypocritical, mainly because they're saying more human capital, but again, they're not using the Eurobond they're getting to invest in that human capital in terms of education. Like for us university students, capitation has been reduced, we are paying more in fees. Don't you think our government is hypocritical?
All right. Thank you. Thank you so much for your questions. Patricia, yours was the debt burden, the impact it has. Kindly, just 3 minutes.
So on that, basically we're just saying when the debt is too high, when a country is in a debt burden, basically, it will focus into paying debt instead of development. So like in the case that we had this year, the government is too focused into not running into a default. That's why the government is currently spending out of its expenditure, more than 50% of it, it's as of February, end of February, more than 50% of it is directed into debt servicing. And development expenditure is only 6% of all the expenditure that the government is doing. So in that case, that means the government is not putting money into development in the economy. So the result for that means there'll be less productivity in the economy, because if the government is not doing, say, infrastructure, it's not doing anything in education, in health, that means eventually the production in the economy is going down, basically. So the government will focus in paying debt rather than development. Currently, the debt service to GDP, I think it's more than 80%. So that means out of the money that the government is collecting in taxes, that means 80% of it, it's debt service. So that leaves only 20% or less than 20% in development. So that is the effect in the economy. There's less development, but we are not running into default. So that's it.
Harrison, the sweet spot between foreign and domestic debt, what is it? Where is that sweet spot for Kenya?
Please allow me to first answer the other question that you said wasn't clear. I'll just lay 3 points so that it's clear on the table about the implication of defaults. One, we become insolvent. I mean, insolvency is not a good thing anyway, and that deters a foreign investment into the country. It creates divestment. This is why I was piggybacking on Stella's answer at the beginning. So that's just one clear point, which is a big problem. The economy suffers. Businesses are not able to run appropriately. Income distribution is reduced. This is a question that was asked, and poverty levels to a large extent soar. Insolvency is not good. Number two, we can get a lot of international suits and domestic suits as relates to this debt, and then the government has a double whammy, in a sense, to use a cliche, then they have to pay, the legal implications of this, and then they have to deal with trying to solve all of these debt questions that are arising in terms of dealing with all the restructuring processes that the government has to deal with at the domestic and at the international level. So again, from a legal perspective, you can see you have to deal with serious legal questions and possible legal suits that relates to sovereign debt. The third one, which I've spoken about, is our sovereign assets are at risk. And I said, in most cases, they will not be taken away. Our sovereign assets will remain our sovereign assets. The day-to-day running of these sovereign assets might be taken by the creditors and the lenders, and then we have 20, 30, 40, I don't know the years, because again, like we have discussed, the question of transparency of some of these contracts is not clear. I'm sure my colleagues can possibly even add on to this list. So it's just to give very concrete, direct answers about the implications of a Eurobond default or a sovereign debt default. Now, to answer the question of what is the perfect blend, there isn't. I don't know whether there is an international economist, macro or micro, who could stand up and tell us there actually is a perfect blend. It depends. But one of the things that every country must watch out for is, for example, and I don't know whether it has been mentioned already, the forex risk that is related to especially money that is borrowed in foreign currency. And the Eurobond is the prime example here, because the dollar rate, depending on the economy, rises and falls. Like now, with the stabilization of the dollar rates, you can see we are paying much less than what we would have been paying if the rate was still at 160. Now we are operating at 140. I think even less. Stella and Patricia might know the real numbers here, even less. So there's that risk. So foreign debt composition has that risk. And I think one of the panelists called it an alternative place to get our money. Domestic debt has its own problem, but in many cases, if it is denominated in local currency, it is less riskier. I mean, we of course shouldn't borrow more, because we have spoken a lot about debt sustainability. So there isn't a perfect or a sweet spot. I think the questioner is looking for a sweet spot. It's hard, even for economists, to come up with this. We just have to do what we are trying to do, but we're doing it badly. And someone called it hypocritical. Yes, it is complete hypocrisy. I want to say that as clear as can be heard, that our government is hypocritical in this sense, because you can't be saying you're borrowing this to help the economy, and the most important sectors of the economy are not feeling any impact. At least there's some sense of consensus in the room. Even though it is not complete, there's some sense of consensus that the government is not telling the entire truth when it comes to some of these questions. And therefore, the debt ceiling, I think Stella mentioned this. I find this abhorrent, guys. I mean, you can't put up a ceiling that you are breaching. And I read the parliamentary debate on this, and they're talking about it as if it's a very easy thing. No, we have a 55% GDP to debt ratio plus or minus 5. We have breached it, but the Kenya Kwanza government is still doing a lot to give us a bottom-up economic model. I mean, our parliament, to a large extent, is also a failure. Let's agree, and maybe we and the people in this room can change this by voting out better leaders. I think also now starting even to think about solutions. Yeah.
Stella, there was another question: investor confidence. How can we boost it or keep it despite our debt?
Well, they are interdependent, the investor confidence and the factors that contribute to it. So how your currency is performing, how your economy is performing and the FDIs, the foreign direct investments that you get, or any foreign investment that you get as a country, will be determined also by how your country is performing in terms of economic growth, in terms of the cost of the price levels, that is inflation, because inflation will determine, for example, what a foreigner gets, the value of money, the purchasing power. So in short, for a country to maintain a good investor sentiment or investor confidence, it has to operate in a manner that, just to say, makes the investor happy. That is, enable domestic production, enable economic growth that is also being felt on the ground. Because, for example, right now we say that the economy is growing, but when you ask the common mwananchi, they feel that we are going backwards in terms of creating investments that are of value to an investor. So we've heard or seen how the NSE was performing or has performed in the last couple of years. So, for example, I think you saw on the news that NSE was the worst performing stock exchange market in the world at some point. And when you hear such things, this sends bad signals or negative sentiment out there. So it shouts, this country is not doing well, the stocks here or the equities investments here are not giving returns that we need, the stock market is declining, and so on and so on. So someone asked about, talked of the shilling, how the shilling is performing right now. Yes, it's a matter of sentiment play, and for this to be sustained, the fundamentals have to be worked on. So fundamentals include increasing the productivity of a country so that we increase what we export and reduce what we are importing, just to balance the demand and the supply of dollars coming in. I'm using dollars because it's the benchmark rate or the standard exchange rate that is used between importers and exporters or trading partners. So what I'd say, for a country to sustain the confidence or the positive investor sentiment that it has or it has been able to amass throughout the years, it's to work on the fundamentals. Fundamentals including the economy, including exports, including attracting foreign direct investments by, for example, having a conducive environment in terms of taxes, whereby you accommodate people that set up in your country. Like, you don't have to consume all their profits in taxes and expenses.
All right, so Patricia, and this question goes to all of you as well. Can you provide any case studies in terms of countries that have experienced both positive and negative outcomes from Eurobond issuance, that highlighting some of the things that we as Kenya can learn from them, and in terms of the best practices for debt management and as well as fiscal responsibility? Is there any example that Kenya can be able to mirror in terms of trying to keep our house in order in terms of a Eurobond?
On this, I would say if you've not defaulted yet, you're not in the bad books. So in this case, probably the only 3 countries that have defaulted in sub-Saharan Africa is Ethiopia, which defaulted in December. Then we had Zambia and Ghana earlier before that. So that is where Kenya was fearing to go, because when you default, it comes with its own disadvantages. You'll be exposed to very high borrowing costs, if at all you'll be successful in issuing a Eurobond, or just things, investors will not be attracted to invest in your country, basically. So that will affect all the diaspora remittances, which will affect FDIs and all that. So that means you'll be under more pressure, your currency will be under more pressure, economic growth will be subdued and all that. So in the case, we can just check, for example, Ghana, which is undergoing the debt restructuring currently. When you get there, when you're in a default, I can say you're not in power anymore. You depend on mostly the multilateral lenders, which include the IMF, the World Bank. So currently, Ghana is undergoing the restructuring, their debt restructuring, and they issued for the domestic bond holders, they were given new bonds basically, and they were given at 0 coupon for 2023, then 5%, I think, for 2025 going forward. So the first thing to do is to restructure your bond, and the IMF will not give you money unless you provide that restructuring, unless they are satisfied with the debt restructuring. So the first thing is the multilateral lenders will give you the conditions under which they'll support you to get yourself out of that. And even to quote, I think Kenya has been subjected to that already. For example, by the IMF, we have the finance bill 2023. It was, we can say it was kind of sponsored by the IMF, because they are always advocating for ways that you'll get more revenue to get yourself out of where you are. So they'll want you to tax more. That is part of, we can say they're sponsored by some of these lenders. The more taxes, we can point out the increase in the VAT on fuel. It was sponsored by, I think, the IMF. They always want you to cut on spending and increase your revenues. So in that case, unless you do that, you're not going to get any money from them, and you desperately need the money because you want to get yourself out of that. So I think it's not a beautiful place to get. That's why I always say the Eurobond issue was a good decision for Kenya, because as a country, I think it's a first step not to get in there. Then you can work out everything else later. Because for example, in the issue of Ethiopia got into a debt, the default, because it was from a civil war for 2 years, and we had the COVID, which disorganized the economy in terms of productivity, that led to default. In fact, it was a coupon payment default, like an interest payment in December, which was, I think, around 33 billion or something. So in such a case, the bond was supposed to mature this year. So Ethiopia is now doing it's planning to do its restructuring. So as a country, we are supposed to be, what we can learn from that, I think it's taking caution before you get there. Because if most of the sub-Saharan African countries, we cannot say they've used the Eurobonds in the perfect ways. We have the issue of corruption, which is very notorious in the region, and we have the issue of no transparency in the region. So I don't think we can pinpoint a country and say, oh, that one is doing very well. We can say that West African countries are, maybe we have the Ivory Coast. I think it's been pointed as a country that is doing well in debt sustainability. We have we had the credit ratings. The agencies rate it as a good performer in terms of debt sustainability, and it even issued a Eurobond this year, which was a better performance than Kenya, because it got a double-digit rate. It was around, I think, 8%, 8 point something, while Kenya got 10.4 and a coupon rate of 9 point something. So we can say maybe Ivory Coast is performing better because it has better debt sustainability strategies. But in my view, I think in the sub-Saharan region, unless you're in default, I think we are all in the same basket, kind of.
Harrison, are you of the same thoughts? We are okay?
Yeah, I'm of a bit of a different view. You know, I mean, I maybe the example is, you know, if people are talking about your possibility of default and you have not defaulted, it's not a good thing. In fact, it's what was our problem. You know, it gives bad signaling. So this idea that African countries are perpetually at the risk of default is not a good thing. It's not a safe place to be. It's not good for the economy. It's not good for us as a country. That's number one. Number two, who's benefiting? You know, we have to ask that question, who's benefiting? And here we can go as back as colonial the post-colonial period, and the neo-colonial and imperialism that international financial institutions like the IMF and the World Bank have been part of. So if we don't tell that story, we are telling half a story. If we don't tell the story that, yes, we are trying our best sometimes as sub-Saharan countries to manage our economies, and the IMF and World Bank has made it difficult for us, we'll be telling a half of the story. And it started with the structural adjustment programs of the 1980s into the 90s. The neoliberal projects of that era have continued with the conditionalities that I think have been mentioned here very clearly. When the IMF gives you money, it sets very many of these conditions, which is a sovereign risk. Maybe this is another implication of risk of default, not of this default or even default itself. You lose your sovereignty. You lose sovereign autonomy. The idea of financial sovereignty is that we can decide what we want to do with ourselves. But if we cannot do that, we are colonized. At least we are neo-colonized, if I use Kwame Nkrumah's words. So, and in a sense, then the international financial institutions need to also be reformed as we are trying to reform our own processes. It's not as if the World Bank and the IMF are, a good players. There's an assumption of neutrality, that they love us, they come to save us from our underdevelopment needs. In some cases, they exacerbate them with some of these conditionalities that do not take the interests of our countries at heart. And I mean, the privatization agenda of the neoliberal era has not been good for us. It just hasn't been. And it's still part of the agenda even under the Kenya Kwanza government. And when they sold us their manifesto, for those who read it, because I did, it was beautiful. It seemed like, this is going to save all of us. It even read like a socialist manifesto to some extent, but there have been, the implications has not been the same as what has been on the manifesto. In a sense, they have hit the ground and they have realized how bad it is. And this is why when the president speaks about the need for the reform of the international financial architectural system, he now understands how difficult it is and what position sub-Saharan African countries find themselves. So that's the point of difference that I come with into this debate. I think we need to think about that, and we need to think about it seriously. And who are the people funding the IMF and the World Bank? These institutions are not running on their own. They're not neutral institutions. They're states that are running them. And what are the interests of those states? Aren't they the same bilateral lenders that are coming out of the West? Is China any different? We were once told that it is different, and now we can see that maybe not as different. Yes, their concessional lending is much better, but has it caused us the same risks? I think it has. The good stories, I think we have had the bad. Ghana, I think Argentina. I think there's possibly, I would say to some extent, we need to study them carefully also. It's not always good to say they're complete success stories, but countries which have tried to do good, fiscal consolidation, improve their macroeconomic policies, even while getting Eurobonds. I think in Latin America, Chile and Uruguay have been used as poster childs. I don't think they're the best kind of example, but they have some positive experiences. And these positive experiences have come from strong governance frameworks. They have come from policy, I would say discipline, and trying to mitigate the risk associated with Eurobond issuances. Yeah, the warning that I have is some of these consolidations are not good. Like debt, we are being sold for debt swaps. I think you've had them. Debt for climate, debt for food, debt for development. There's a huge risk there. Our government is setting up these debt swaps, and those two have transparency risks. They have transactional cost risks, and the evidence from the many years that they have been around is that they have not reduced the debt problems that some of the sub-Saharan countries have faced. So that's my view.
All right, Stella, your thoughts on the same? Any other? They have highlighted the case of Ivory Coast. They have highlighted the case of Argentina. Is there something you would add on the same?
Yeah, what I'd love to add is for the African countries, or for the countries, Zambia, Ghana, and even Sri Lanka that have defaulted on their debt, some of the factors that were followed by that default included some populist way of governing a country. So for all the three countries, if you analyze all of them, the government in place took tax measures that included cutting taxes. So all of them, the three governments, cut taxes just before they defaulted, or a few years before they defaulted. So I'd love for you to look at, I am not supporting taxation, high taxation or over taxation. I'm just telling you to look at a country like Kenya, for example. Now, if you told the government to cut taxes, having in mind that 80% of the revenues are being used to finance debt, that is you just see an outright default, right? You agree with me, right? Yeah, so such populist policies, and I agree with Harrison saying that avoiding default and ensuring that the debt that you borrow works for you and it's beneficial to you, you need to come up with policies first. You need to have checks in place, you need to have integrity, you need to have transparency, and you also need to have accountability. So yeah, that's all I'd add on that subject matter.
All right, so here's James. He had asked this, I'll ask him on his behalf, from Kemu. Is the government of Kenya obligated by law to issue prospectus before floating Eurobonds? Just quickly.
I think yes. Yeah, I think it's they're supposed to issue because you're supposed to show people what you're about to do and what you intend to do, and even the region where you're supposed to get the money and all the particulars of the whole thing. Yeah.
All right, so that the answer is yes?
They do issue, it's only that people are not...
All right, did the government issue prospectus for the, prospectus for the new Eurobond? So the answer to your questions, James, are yes. There are other questions from Leon. Where are you, Leon? Leon, is he with us? Get him a mic. Grace as well. Grace from NIBS. Where is Grace? Prepare yourself, Grace. Leon, ask your question kindly.
Hello, good afternoon. My name is Leon Monge from KCA University. My question was, don't you think that we are sinking into a more deeper hole by borrowing the Eurobond and by issuing out the Eurobond? Number two, don't you think that the Kenyan currency, the Kenyan economy will face a deflation because the Kenyan currency will be less in supply against the dollar?
What was the second question, kindly?
My second question was, don't our speakers here think that we'll face deflation in the next 6 or 10 years because we'll have less money in the Kenyan economy?
All right, Stella, you take that. Sinking into a deeper hole, deeper and deeper. Harrison, you take that. Where is the other question from Grace? Grace?
What are some of the measures that the government of Kenya can take to ensure that the benefits of Eurobond are higher than its effects, negative effects?
All right. So the benefits to the public as opposed to the effects. Let's start with sinking into a deeper hole. Harrison, let's start with you in terms of isn't continuous borrowing just sinking us into a deeper and deeper hole?
Yes, I mean, that's the first point that I think some of us have made. And I guess the corollary to that question is, how do you deal with this problem? Some people say don't borrow more. And the realities on the ground are such that you might need to. I think when Stella speaks, she'll say practically we have to borrow more. So I don't want to focus on how much more we are borrowing. I think that's why we talk about debt sustainability instead of complete, or I think our members of parliament use the political term, reduce your debt appetite. That's sometimes the the language that is used. But over and above that, in order to borrow so that, this is really benefit the countries, we have to deal with odious debt that we have mentioned. So then we will not be just borrowing and going further and further into a hole, or what Stella called going into a cycle of debt. You pay with the right hand, and then you're borrowing with the left hand. It doesn't, look good when we can't show anything for this debt. But there's another regime that we have to ask ourselves: what is happening within the debt structuring regime? There is not an international debt structuring regime. If you are a company in this country and you fall insolvent, there is an act of parliament, a big, big act of parliament called the Insolvency Act. It has very many rules about how creditors are supposed to be arranged, how creditors are supposed to go to court, how they're supposed to meet, what they're supposed to do. Many rules. Now, at the international level, nothing of this sort exists. So creditors can behave however they want in case of a default. And we have had a lot that has been written. A lot of ink has been spilled on the question of, creditor holdout. Sometimes creditors come together and some creditors just don't want to accept certain proposals. So we do not have a secure, a predictable debt restructuring regime at the international level. This we have to resolve if we are not always going to go back digging in the hole. We have to deal with the question of odious debt, including the possibility of debt cancellation, especially for countries in the global south. That has to be on the table. That discussion must be there. We have to see how some of this debt can be cancelled. Otherwise, I don't think that some of the countries in our side of the world, in the global south, can be able to deal with some of these problems. So we have to talk about debt forgiveness. Many bilateral, multilateral, and commercial lenders do not want a structured way of resolving this problem, because then it might make it easier for an orderly solving of some of these debt defaults. The reason why we have a domestic insolvency act in our country is because we are expecting that companies will default. So why is it that at the international level we are not expecting that countries are going to default? We must expect that and come up with rules. I know that the IMF in the early 2000s tried to come with a mechanism that would have been an orderly mechanism to resolve some of these problems, but some of the global north countries completely refused this question. So I guess my answer to this question is there are ways you can stop, you can come up with to stop digging the hole so that you're not going further into the hole. But there are also ways in which once you are too deep inside this hole, for the benefit of justice and global governance, we have to come up with an appropriate regime that can remove countries out of default. Because even at the domestic level, one of the biggest ways of dealing with this problem of insolvency is called company rescue. There's a huge rescue regime. How can we get some of the countries that have already defaulted to be rescued without giving them conditions that push people further into poverty? You can see how the global financial and monetary system is designed against the poor, is designed against poor countries. We have to find ways to redesign that. So my point is, as you focus on the domestic, please also focus on the international, because you might deal with all the domestic problems, but if you do not deal with the international problem, we in the global south will still remain in a cycle of debt and sustainability.
All right, Harrison, thank you. Stella, do you remember your question? I had not noted that. We'll come back to that. I had noted this one for you, Patricia. Measures government can take in terms to ensure that we do benefit from the loans more than they actually hurt us.
My immediate answer would be cut corruption, because most of the times you get the money, but you cannot pinpoint where the money went. So I think the best thing the government can do for us is put in check when the money comes in. The second thing would be put the money where it was supposed to go. Like you cannot get a Eurobond that you're expected to pay at a very high interest rate and pay salaries with it. Because when you pay salaries with it, you're not getting anything from it. You're not even increasing productivity in the economy. So at least use the money in projects that will give productivity to the country. That way it will generate money for you to pay back the loan. And in most of the, if that is very genuine and you do those two things, I think by the time the maturity is due, you'll not need to borrow to pay. So my two answers would be cut corruption and do what the money was intended to be done.
All right. We take another round of questions, but I want you to keep this in mind because this will be our final question. If you were to be tapped by the president to head his economic team, what would you advise for the country to do differently to improve the country's debt situation? What would be your advice to the president to change the current debt situation? Think about that as we take the next round of questions from Dr. Mutegi. Where's Dr. Mutegi? Let's give her a mic. As well as Cynthia Mwikali.
The size of our public debt has been on the increase. A borrowing and a buyback is still above the IMF sustainability level threshold of 50%. We are above 73%. This has had a big impact on our economy in terms of the private sector growth, specifically our domestic markets. We've seen the levels of inflation, the changes in interest rates that have taken place. And in our morning discussion, we talked about public participation and talking about it, especially in the platforms and as much as we can to reach out to our policymakers and our leaders to hear that we are checking and we need change in this. Now, other than us as a public speaking out, the banking sector, the financial institutions, other institutions have been affected greatly, especially in terms of in relation to defaults, and the rates have gone high and changes in, economic stability of a normal person or a regular family has changed. So basically business has changed. And this has affected even the business for the investors, especially in the financial sector. What can they do different and what are they doing different to steer this wheel to see that the government hears the outcry that this debt is running out? Thank you.
All right, Stella, you will take that. There was Cynthia.
So hi, I'm Mwikali from ZTech University. So my question is about the debt of our country. So most of the times, when you get these funds through the parliament approval, we have the track until when the money is already deposited to our country's accounts and so forth. So after that, we lose the track of everything, how the money is being used and everything. So I feel like, okay, on an individual level, I feel like anytime that we lose track of this money, there's no way.
Just a question.
Yeah.
Just a question. Very small context, just a question.
Okay. So I feel like after we lose the track, it's so difficult to know citizens on how we are going to follow up in everything, and we just pay for, we have to pay for it, and we don't know how the money goes. So how can we get to be on the track of how the money is being used and so forth?
So how can we keep track of how the money is being spent?
Yeah.
All right. Sure, you take that. Let's start with you, Stella.
Before I answer Dr. Mutegi's question, I have remembered what he asked.
Okay.
He asked about deflation, whether we will run into deflation in 6 years or so. So I'd say first, 6 years is so long to forecast. Let's just work with the near term. The dynamics of a currency in terms of us running out of shillings, I don't think that will be possible in the near term. We are still paying a lot outside. So if you are paying externally stuff like imports, debt, and so on, it's very, not impossible, but very hard for our country to have more dollars than shillings. So that will be my short answer. Then to answer her, one, I'd love for us to stop treating the government as victims, because the government is the one that causes these problems that we have. Even just to go back to what Patricia has said in terms of allowing what we borrow to work for us and to have more benefits than the disadvantages, who are the corrupt people? They're the ones who are leading us. So we cannot tell, yes, we will speak out every time and say that corruption is one of the biggest problems that we have as a country, but who is being engaged in corruption? It's the same people we are trying to tell, here we have corruption and we need it to end. They are the same people who are engaging in this kind of corruption. So with just to answer, just a short answer to what you've asked, there's a really nice quote I saw somewhere, I can't remember by who, but it said something in the lines of, if a country or an economy wants to improve or to see the fruits, other countries are seeing it, maybe they have good leaders, but for now we work with what we have. You have to give politicians or the leaders that you have, we have to come up with policies that also benefit them. Because when we have policies that are against them or rebel against them, they find ways to maneuver through, and at the end of the day, we end up with the kind of problems you're seeing that we have. We end up with problems of corruption, borrowed money, and we don't know where the money is going to. So in addition to us speaking out, because that one we have to keep doing, we have to speak out, and we have to speak out in numbers, because in Kenya, public participation does not work for individuals. You cannot go and tell the government, no, I don't like this article, this line in the Finance Act. You have to be in numbers. And that's why institutions, activists, when they go to things like public participation on the finance bill or something, you see things happening, you see things changing. But when you go as one person, they just say, yes, we've noted that and we will act on it, and that nothing is done. But when you're in numbers, and that is where Kenyans come in terms of being aware, being informed, and when you know things and you are able to participate from a point of knowledge and not from a point of rumors and from a point of speculation, you will be able to move things. We can stand out and say, this particular article does not favor the banking sector. It does not favor the manufacturing sector. We need it to be adjusted to this and this, or be removed. So when we go in numbers, we speak out, we participate in not only the finance bill or the revenue side of things, we also participate in terms of expenditure, in the expenditure side, and tell the government, no, we don't need this, we need this to be reduced, we need this expenditure to be reduced, this is the expenditure, what is it for? Like interrogating things and interrogating from a point of knowledge and from a point of information.
All right, thank you so much, Stella. Sir, kindly.
Hello, sorry, we had a question from Emmanuel Ochieng.
Yes.
That is Kemu, and Meru also from Kemu. Emmanuel Ochieng? Okay.
Thank you so much. My question was about, we're talking about the debates, and of which the country is going also through the challenges of how it can fix it and how it also can put into use. But then there's a lot of the people who are here in this country, they are failing to understand the amount of money that is always gotten by the government as a loan, and at the same time seeing how this money has really been put into a useful form, and also to see the economy growth that is also prospering. But none of such things are really happening, and they are seeing. So how best can government really, because we are looking at, if we are saying policies,
I don't know the policies that are already in the grounds are really helping the economy, or there is a need for amending the policies so that at least there is a betterment of improvement in the economy. So thank you.
All right. Swakei.
My question is along the same lines. Basically, if you look at what the macroeconomic measures that Kenya has taken are classic measures to manage debt. So just in a nutshell, what is the one thing that Kenya has not done that we need to do to actually see the measures take effect? But okay, they are taking effect. But what is the other one thing that we need to crack? Thank you.
Harrison, do you want to take that? One thing we need to really get right?
I don't think I can point out one specific thing at a macroeconomic level that needs to be done, but I can say that there are things that have been done that need to be done better. And I hope maybe the questioner might possibly agree with this, because these questions are tied. For example, in policy, you know, after the 2010 Constitution, we got to have a government now. This government is supposed to be a government of justification. It is no longer a government which can do whatever it wants. That's number one. And I think we need to understand that we are the people who have then given this government power, and therefore they are exercising delegated authority from the people. That's the very top of the Constitution in Article 1. So then we have to we have to tighten some policy issues. For example, I think that one of the things, you know, if I was to just point to one specific one, we need to ask the government to be much more transparent, okay, on how it is borrowing and where it is borrowing and what are some of the areas that are important. I think I started giving the example of what now they want to do to deal with the budget deficit of debt swaps. We have debt for nature swaps. You know, climate change and finance has become a very big issue. The government is saying we want to leverage on this. Our president is, in fact, I think one of the AU leads when it comes to climate change policy in Africa, and he's been huge on the question of climate change. Now, if we are going to use debt for nature swaps, for example, and climate change, I mean, what kind of instruments are going to be used? Who are going to be the actors? And what types of debt in terms of composition are going to be dealt with? To tell you the truth, what Parliament has approved are 2 paragraphs, which are present, you know, in the midterm policies that were presented by the Ministry of Finance, which is also answers for me what I would tell the president to do if they appointed me. Let's tell people the truth. But for a populist government, can you? So I also live in reality. Our government is a populist government. Democracy is a populist process. And this, I have to say, answers some of the questions that have been asked and even embeds more. So we have to fill policy gaps, which are still present. Some of the macroeconomic policies are helping us, but we need to get, I think, much more information that is getting both to our legislators, who many of them don't know, are not empowered on how to interrogate these processes, again, because of populist politics. So again, let's find ways to separate our populist political agenda that we want this government to prosper. Everyone does. Even the ones who did not vote for this government, in a large sense, wants this government to prosper. And therefore, the question that I think Mwikali asked and Stella answered is that we have to remain eternally vigilant. Someone said, follow the money. We have to follow the money all the way to the very end to find out what exactly that. And at every stage, if the government does not tell us what our money is doing, we have to call the government to account and use our institutions, including our judicial institutions, to make the government accountable when they fail to be accountable. And people should not be afraid to do this. The youth should be empowered to do this. The bigger audience here is the youth. The youth must go to court, for example, and ask the court, what is the government doing to protect us from climate change? And how, because we are the ones who are going to be here. Most of these leaders might not be here for the next generation. Our children are the ones who are going to be here. So again, I guess I'm not saying that there's one thing that we can possibly pick up. I think there are a myriad of things that still needs to be done. And this is the problem of Africa. African solutions must have multiple pronged approaches, even on this specific concern. And I hope that sort of tries to answer that question, because I think it was couched in a very specific and restrictive sense.
All right, thank you so much, Harrison. So we'll take two more questions, I believe, Sarah.
Yes, there is a question. There's a gentleman here by the name of Chieng. You had asked a question about the global conflict such as Russia and Ukraine. Maybe if you can take that question again. And then there's somebody who asked the question, but he did not, or rather, the person did not indicate the name. The question is, since Japan is said to have the largest level of debt, how is it that the level of development seems to not really be affected by it? What strategies have they applied since their debt GDP ratio is speculated to have exceeded 200%?
Patricia, you will take that.
Anonymous.
The question on Japan.
Once again, thank you so much. I was caught off track when I was mentioned, but this was the first panel. I had prepared that question. But nevertheless, thank you so much for the second chance. The question goes, how are the ongoing global conflicts, such as Russia, we have Israel-Gaza conflicts, and we have also the tensions between the North and the South Korea, influencing the Kenya approach in managing its public debits in relation to Eurobond insurance and physical stability.
Stella, let's start with you. Yeah, on that issue of international conflicts and how they are affecting the Kenya strategy in repayment of debt.
Such conflicts mainly affect supply chain dynamics, because, for example, the Russian-Ukrainian war was mostly affected fuel because of the importation and where we get our oil from. So with regards to debt, I'd really not relate the two, given that this is a matter of trading, and we do not. It depends on the market, your target market specifically. So when we issue our, for example, Eurobonds, they trade in the New York Stock Exchange. Yeah, so it depends on the target market and who is borrowing or who is taking up these loans that you're issuing. But for the conflicts, my sense is that these, I'm not saying that there could be no relation, but right now my sense is that any conflicts between, any geopolitical conflicts mostly affect supply chain dynamics and not really where you issue or how you issue debt, because the markets are different. And even the supply chain are a factor of your trade partners.
All right, Patricia, Japan, their debt exceeds their GDP, but are they okay? Is there something we can learn from that?
For Japan, the economy has been, we can say the working population is low. It has most of the people are old people in Japan. So the productivity in the economy is not high as probably any other economy that you'd think of, one of the major economies. So over time, the economy has experienced deflation for the longest time. For example, the 10-year bond, I think it's less than 1%, whereas in Kenya it's in double numbers. So what we can learn as a country from Japan, I cannot pinpoint one thing. I feel like we are different economies with Japan, because even when you look at the charts, Japan is plotted with the major economies like the US and the UK. So I think the question I had something like, we are planning to issue a Eurobond in the Japanese, okay. So if I don't know the specific question around that, but if Kenya were to issue a Eurobond in the yen, currently the Kenya shilling has been gaining against the Japanese yen. So in the event that the Kenyan shilling depreciates against the Japanese yen, like we experienced last year. I think last year the Kenyan shilling depreciated against all currencies. So in such a case, our debt would be higher than what we get today, because when the currency will depreciate, we'll get more debt from that country that is in that currency. So I think, I'm not sure of the question that I'm answering, but I think in the event that Kenya issues a Eurobond in that currency, it's a good diversification in terms of currency risk, because if we are always issuing Eurobonds in the dollar, so if we get an alternative that will give a better currency risk in terms of when our shilling is appreciating against the dollar and maybe depreciating against another currency, so we are not in one basket. I think it's a good thing. That's all.
All right, Harrison, there's a question I had asked, and I hope by now everybody has their answers ready. If you were tapped by the president today, what would you do differently? Harrison, let's start with you.
Again, I'm sorry, because I wanted to just comment on that question of connecting global geopolitical unrest and conflicts with debt. And the question of debt at the local level. I think what Stella said is important, because you can see this affecting supply chains. It then affects trade. And if we are not trading optimally, either with our main trading partners, because supply chains have been affected, then that affects our foreign exchange. And if that affects our foreign exchange, then we do not have, enough money at the domestic level, and we have to borrow dollars. I mean, that is me trying to draw a direct line to how a global conflict can affect domestic debt. It is a stage-by-stage issue, and that also explains, I think, Patricia has spoken about possibility of this. It's not just a possibility. I think the government will soon issue what they're calling samurai bonds, if I'm not wrong. That is the name for the Eurobond that is issued in the Japanese yen. Okay? They have that interesting name. It is part of our plans as part of dealing with debt deficit. At least this was debated in Parliament. Oh, sorry, not debated. The government suggested it. Debated is a different issue. Our members of Parliament might not even know what a samurai bond is and how it's going to be issued. And that's part of the problem. So sometimes when you say it was debated, was it debated? So that's the first set of issues. And I think Japan is a developed country. They have been able to consolidate the international trade much more favorably than we have done in the different years. There's a whole international trade imperialism story to that I can tell. There's just no time for that. What would I tell the president to do? First, personally, when I look at some of the problems we face, even just the debt problem, I normally ask myself how people actually offer themselves for political leadership. I don't understand. So this is a very personal concern. These problems are so difficult to solve, at least the way I understand them, that before I offer myself to leadership or to solve this problem, I have to think quite critically. But assuming, like I've been asked, the president comes to me and tells me, so now you have done a lot of research, you speak, highly about these matters, you seem to know a lot. What can we possibly do? I would say one of the most important things I will say that the nation has to, the president must do is to be truthful about our situation. We in the global south have to be truthful about our situation. We have to tell our narratives correctly. But we are telling false narratives. It goes back to that hypocrisy. And this is hard for a politician to hear. If I'm appointed, maybe I will say this. Will I get fired? Maybe I might get fired the next day. We cannot tell people that we are going to build a bottoms-up economic model, knowing that the global financial architecture runs in a purely capitalistic model that might make it very difficult for such a model. Maybe we need to change that narrative. But will a politician listen to that? Because that narrative is a populist narrative that wins elections. So again, now you see, my expertise on this question gets into a direct collision with politics. How do you resolve that? Honestly, I don't know, but I will tell them to be truthful about our situation and to tell people in the best way people can understand in our part of the world how difficult and complicated this story is. And not to say that we are solving it, we are borrowing less than previous regimes, yet in truth, we are actually borrowing more. But will we be able to say that in a political campaign? Again, no. So you see how difficult for me that question is? It's a question that collides with my intellectual and the politics and my intellectual research are in direct collision, at least populist politics, and it is mainly populist politics that wins elections. So I might tell the president this, they might implement it, and they might lose their political seat.
That is our.
So that's.
What do you think? What would you do?
For me, I think I'd tell the president to separate politics and real work. If, for example, in Kenya, and I think it's a problem in Africa, you'll find after elections, it's like a rewarding time for people to be rewarded. The ones that supported the president, they are given ministries. You'll find someone given a very main ministry, and they know nothing about it. So for me, I'm always about, can we at least maintain professionalism in the government? Because you cannot run politics, you cannot run a ministry with politics. A ministry will need real strategies and real job. So for me, I think I'd tell the president to stick, to separate politics and job. Even so, there was an office that was started about debt sustainability. And since I think as Africans, we have a problem with accountability. I think when the office was being started, I think the debt was below 10 trillion. And by the time, I think it was like 2 months ago, the CEO resigned. I mean, I didn't see much of work that he has been doing to enable or to improve debt sustainability in the country, because the debt has been going up and I haven't seen any real strategies in the economy. So I think, one, we have a problem with accountability as a country and as a continent mostly. So my thing would be, at least let's have some accountability and let's encourage professionalism in the government. Let's not focus on rewarding our friends with jobs that they cannot do.
Stella?
Yeah, I hold the same position as Patricia. One, the tapping you meant leaving me to do the things or me advising?
You advising.
Okay. So I'd advise on recurrent expenditure. It's the main elephant. It's the behemoth that is affecting our country. And by that, I'd advise him to really cut those cash positions, because I don't know, we don't see their value, we don't see what they are doing, we don't see what they are bringing to, we don't see the value addition to our country. So with that regard, I'd do that. And number two, I'd tell him to focus on one thing at a time. In that, right now, our country is everywhere in terms of our government. They are on affordable housing, they are on tax revenues, they are on, and this affordable, we have affordable housing, we have like 3 projects under that. So we can't place a finger on where exactly the president wants to leave legacy. They're on roads, they're on development, they are everywhere. Like, just pinpoint one thing, this is what I'm going to work on for these first 5 years. We've already done 2 or 1.5. So focus on one thing and really work on reducing the recurrent expenditure. Just do it for the nation, for the interests of the people.
Harrison, your final thoughts as we close?
My final thoughts is to just mention how complicated our problems are, and how, even as we say some of this, deal with some of these concerns, we need to think about multiple approaches that can solve our problems, both at the domestic and at the international level. I think that for me is important. I agree with what my colleagues have mentioned, and I think this can be very helpful. As I know from realistic point of view, some of these issues come with promises, political promises. You promised people you will do ABCD, and you're trying your best to possibly do that which you have promised. Sometimes I think our governments do not take into account, or our politicians do not take into account, the enormity of the task before them. I would therefore say that there needs to be a very strong focus on dealing with issues that affect the most vulnerable people in our society. Because we are addressing a group of young people, this should be our main focus. How do we imbue our processes in a way that deals with poverty, in a way that deals with the fact that many of our people are living below, I would say, $1. I mean, there's just a large chunk of our population that is impoverished. Then how do we solve some of those problems that are directly related to the most vulnerable? How does all of this problem boil down to some of the most poor people in our country? How will they understand them, and how can those problems be alleviated? If we thought that way, if our leaders thought that way, if we approached most of our problems from that perspective, most of our decisions will be made for the benefit of our people, as the Constitution requires. So that would be my closing point.
Patricia, your final remarks, kindly.
For me, it would be generally, as a country where we are standing, I think it would be the best decision for us would be not to go forward with this. At least take a step back and look where we're coming from and what got us into where we are. As a country right now, we're in a very, we cannot say it's very high debt distress. It's better than 2 months ago because of the buyback. But at least as a nation, as a government, we're supposed to, at least in a more honest way, look for ways to bring down the debt, or at least stabilize the debt, even if it's not bring it down, at least work on the growth rates that the debt is growing at. So number one, it would be check your spending, and number two would be on revenue. And since currently now, I think we are approaching the tax peaks. I don't know if, I think there's a level you cannot increase the taxes anymore. And I think we are currently getting there. As much as the government is trying to consolidate and involve even the informal sector in tax payments, which I support, I think eventually we'll get to a point where we cannot increase the taxes anymore. So what will be the strategy going forward now that sometimes the government is acting like there's no any other option apart from increasing the taxes, which I think it's not working. I think it's not working because the tax revenues collected are always below the prorated rates or below the targets. So I think even after increasing the rates, it's not working for the economy. That means there's something that is not happening in the economy. There's something that needs to be done in the economy for the taxes to work, because you cannot give taxes that you've not gotten as a return. You have to give what you've gotten as a return from your business. So that means the economy is not giving the best to the business owners. So the government, I think, should be more directive into causing projects that bring about production in the economy. So my closing remark would be the government to put more revenue and more expenditure into the development projects, to just get from the low of 6% of its expenditure and at least get to at least even 30%. Because it doesn't make sense to use all your money in everything else but development. Because that means eventually the economy it's remaining subdued because the government is not making an effort towards it. So my closing remark would be the government to reevaluate their priorities. They know there are things that the government have to do, like repayment of debt because they don't want to get into default, but at least do the reevaluation to at least increase the expenditure into development and cut on recurrent expenditure. I don't want to say cut on debt repayments because it's impossible, but you can cut on recurrent expenditure. So that's all.
Stella, finally.
Yeah, I'd love to say that we didn't wake up one day and find ourselves in the position that we are today. So it has been a build-up of policies, maybe bad policies or good policies that were not implemented very well. So I'd love for us to be always informed because we are the leaders of tomorrow. Stay informed, avoid ignorance, and always interrogate issues because we are the owners of this country and we are the ones who elect the leaders and they are the ones who mostly take us to where we are. So be involved in things that happen in the country. Be involved when you hear that this is the season of this is the budget season. The Treasury is coming up with the Finance Act. Be involved and know what is in there, know what they are saying, and know and understand. I know matters of tax are very complicated and complex, but we can try a step at a time. Because again, when we remain silent and ignorance of what we think or in what we feel that should be happening, people say that silence is complicity. In that, when you're silent, you're taking part in whatever you don't want or in whatever you feel that the government is doing and is pressing us at a corner. So you remained silent and they went ahead with it, with what they wanted to do. So try as much as possible and be informed. Don't be a population that is very ignorant or that does not know. Don't be that someone who's being asked what is a Eurobond and you say, I've never heard anything about it. You're literate, you've gone to school, be informed and remain involved in matters that affect us as a country, including the debt levels that we have.
So our topic was, do Eurobonds contribute to economic growth or pose threats to national sovereignty? And I think from our panel and most of your questions generally, the answer is yes and no. In terms of what we can do, we have had some good suggestions from the panelists. And I think this goes to us all, that there is work to be done. Some of it is ours, some of it is from the members of parliament and other government entities, but there is work to be done. Special thanks to our panelists from Stella Swakei, a researcher at Stanbic Investment Bank, Patriciah Mutua, an investment expert at Saiton Investments, and Dr. Harrison, who is a fellow at the African Sovereign Debt Justice Network. So that's the end of our debate today, but that's not the end of our debates. Tomorrow, we tackle whether relying on debt is a sustainable economic strategy. Some of our guests include David Ndi, as well as Churchill Ogutu. And also in the afternoon, we ask the question, what can citizens ensure, how can citizens ensure that the government is held accountable for acquired debt? Some of our guests will also include Professor Gitile Naituli and of course, David Kiiru, who is the head of internal audit at Rafiki Micro Bank. So for those of you who will be joining us tomorrow, that is what is on the table. And for those of you, this is the end of the line. You can also join this conversation online and keep the conversation going on Eurobond, courtesy of Mwanzo Media. Thank you so much and God bless.